When I was skimming the real estate news this week, I came across an article outlining what I think is a really creative way to make housing more affordable. But if you do use this technique, it could end up being a complete disaster. It's Friday, December 9th. My name is Matthew Pfeifer. That's my trusted assistant, 𝗦𝗲𝗲𝗲𝗲. I'm a real estate agent from Regina Saskatchewan. I like keeping you up to date on real estate news. This is my weekly real estate news recap. But before we get into the news, let's get you another terrible joke. What do you get when the sunrise bends over? The crack of dawn. If you have a terrible joke that I can use in a future episode, put it in the comments below. Let's get into the news. The first topic here is actually going to be more of an explainer. I want to talk about the differences between average, median, and the benchmark price, because you've probably heard me talk about all these different price metrics, and you're reading them when you read the news about the average price of the house was this, or the median price, the benchmark price. What the heck does all that mean? Let's start off with average price. It's easily calculated. You just take the total dollar value of all the properties sold in that period, divided up by the number of properties that were sold in that period. The problem with average price is that if you have a large number of high value or low value sales, that's going to swing average price up and down respectively. Next is median price, and that means that half the properties sold above that value, half sold below that value. And it is a little bit more accurate than average price. Doesn't have quite the volatility, but that inherent weakness of always having the price break down the middle still exists. You have a large number of high price sales that happen that month, that will swing the median price up, and obviously the opposite if there's a bunch of low price sales that month. The last is benchmark price, and that is what I use when I do my Canadian monthly real estate market updates, because I think it's a more accurate reflection of what is actually going on in the market. Now, the benchmark price was created by the Canadian Real Estate Association in order to more accurately reflect price fluctuation, because that's what it tracks, how much prices are going up and down, not just the total dollar value or certain number of houses sold above or below that price. And they break it out into a bunch of different categories. Single family homes that are single stories or 2 stories. Then you've got townhouses and then apartment style condos, all separated into 4 different categories. And then when I do my monthly market updates, I use the composite benchmark price, which combines all those property types together to give you kind of a more accurate reflection of what's going on in the market. So if we're seeing single family homes all trending down in price, that will get reflected in that benchmark price. Same thing when things start going up. It doesn't matter what the composition of sales were, because that's going to get filtered out through that algorithm they use to create that benchmark price. There you go. I hope that clarifies the differences in how average, median, and benchmark price are calculated. Let's get on to the next news topic. This first article here is a report from National Bank of Canada, and the headline is that the average family has to spend 67% of their monthly household income to buy the average house in Canada. Great headline, but it's not really true. Yes, the numbers of how they calculated them is accurate, but the reality is not. When you are qualifying to buy a house, get a mortgage, get a refinance, your mortgage payment and your property taxes cannot exceed 39% of your monthly income. Basically, full stop. There's a few exceptions for a little percentage bump here or there, but you can call it 40%. If you're spending more than that, you will not qualify, full stop. So yes, if you just take the average price house divided by the average income, that's how they got to that number, 67%. But that's not really how houses are bought. What you're going to have is starter homes at starter home prices being bought by younger, predominantly first-time homebuyer families, and of course the more expensive properties bought by second and third-time homebuyers who are going to probably have a whole lot of equity in that first or second house they had to put against the next house. So yeah, I know how they came about this calculation, but it's not really an accurate reflection of what actually happens in the market. Next article, you knew this was going to come up in this week's news recap. The Bank of Canada, once again in its last meeting of the year, raised interest rates, and once again by 50 basis points. Remember, there was a time when we thought 50 basis points was a huge increase, and now we're saying, hey, that's it, only 50 basis points. But what I think is more important here is what Tiff Macklem said, and kind of what he said when you read between the lines. In the last couple of meetings they had, they specifically said that while we're getting closer to the top of rate hikes, there were still more rate hikes to come. Now they're more saying, and they're kind of setting the table here for a pause by saying that they're going to be looking at this, saying, do they need to do more before they make the decision to raise interest rates again? Now, that doesn't mean that they're not going to raise interest rates. They could flip on a dime just like they did. It was less than 2 years ago when Tiff Macklem said, don't worry, interest rates are going to remain low for a very long time. And of course, now we just went through one of the fastest rate hike cycles in Canadian history. But it sure does seem like they're setting the table to pause these hikes on interest rates. And like I've been saying for a while, we've got a lot of buyers that are sitting on the sidelines right now, kind of waiting things out, waiting to see what happens with not only interest rates, but also prices. Once they see some stability, I fully expect that they will start coming back to the market. That can end up meaning we could have a very busy spring market if the Bank of Canada doesn't change his mind and start raising rates again. The next article here is from RBC. I like what they put out. They put out really good detailed reports, and I'll put a link to this one so you guys can check out. There's a lot of detailed information. I'll put that in the description below. But the title here is that the market correction in the Canadian real estate market is widespread. But by widespread in Canada, they mean Toronto, Vancouver, Calgary, and Montreal, because that's actually the only cities that this report specifically talks about. But there's lots of good information. You're talking about sales to new listing ratios, demand versus supply, so inventory levels, what's going on with prices, new listings, sales, etc. Lots of really good technical information, which, by the way, if you ever want me to do kind of an explainer video on, for example, what is the sales to new listing ratio, or what determines what's a buyer's versus a seller's market, let me know in the comments, and maybe we'll do like quick kind of, TikTok style videos on that, or maybe more explainer videos at the beginning of these news recaps like I did at the beginning of this one. Let me know what you guys think. But I just want to quickly skim through some of the things they've talked about here. So when they're talking about Toronto, for example, the headline is "The quiet period continues, steep declines over." And that's kind of what we're seeing when you see my monthly market update here. The November one's coming out pretty quick here, or sorry, the December one, talking about November stats coming out. You're going to see kind of everything kind of seems to be kind of flattening off in Toronto. We'll talk more about that in that update. Montreal, the downturn picks up speed, which is really interesting. In the numbers, that is exactly what we're seeing. When I'm talking to my friends in Montreal, they're kind of painting a little bit of a different picture. It's a little busier than what the numbers are showing, so we'll have to see if that kind of results in maybe next month's sales. And then Vancouver, not out of the woods yet. Again, that's kind of what I'm hearing when I'm talking to my friends in Vancouver, that things kind of appear to be stabilizing, but there's still some downward pressure on prices there. And Calgary, prices correcting mildly. Of course, Calgary is probably the strongest real estate market in Canada right now, and I got a lot of really good information on that in that monthly update that I'll be putting out here in hopefully a couple of days, so you guys want to check that out. This article from BNN, which is more specifically talking about a situation in the States, but it very well could apply to Canada, and I think it's really interesting. It's called co-op buying. So that is when you've got, say, 2 friends or 3 friends get together, they're not any sort of relationship, not family, and they're buying a house. They're pooling their financial resources, allowing them to get in the market. They may not qualify for a mortgage by themselves, or they may not qualify for very much of a mortgage, but together they're a lot financially stronger. So this, I think, is really interesting. It allows somebody to get into the market, but there are some pretty significant pitfalls, and you're obviously gonna have to do a lot of legal legwork ahead of time to decide things. For example, what happens when somebody says, hey, I want to move out? How does that sale process work? Or what if somebody decides to get married and they're moving out, or they want to move their spouse in? There's a whole bunch of complications to this. So I think it's a really creative and clever way to get into the market. But like I said in the beginning, this could also turn into a complete disaster if it's not handled properly. What I'm curious to know is, would you guys look at a situation where you would co-buy with a friend as a way to get into the market, and then maybe use that equity and leverage to then buy your own place in the future? Let me know in the comments below. Speaking of buying, have you checked out this video I've got right here, which gives you some great tips on how to buy a house even when prices are declining? I think you're gonna find that really valuable. Lots of good information there. If you like this video, please give me a like, hit that subscribe button if you haven't already, you love learning about real estate, and leave comments. I love chatting to you guys in the comments, but as always, thanks very much for watching.